This is question 47 and we have to start with working notes. X and Y are partners in a firm sharing profits and losses in the ratio of 3:2. And the last line tells us pass necessary journal entry to adjust goodwill and to distribute profits. Working notes, old ratio of X is to Y is equal to 3:2. Z is admitted for 1/5 share. Let the total profit of the firm be 1. Remaining share of X and Y after Z's admission is equal to 1 minus 1 upon 5 is equal to 5 minus 1 upon 5 is equal to 4 by 5. Excess new share, that is 4 upon 5, will be distributed among X and Y in the ratio of 3 upon 5 and 2 upon 5. Hence excess new share is 12 upon 25, Y's new share is 8 upon 25. And Z's new share is equal to 1 upon 5 multiplied by 5 upon 5. That is 5 upon 25. Therefore, the new ratio of X is to Y is to Z is equal to 12 is to 8 is to 5. Sacrificing ratio is equal to old ratio minus new ratio. Excess sacrifice is equal to 3 upon 5 is the old share of X minus 12 upon 25 is new share of X. That is equal to 15 minus 12 upon 25, that is equal to 3 upon 25. Y sacrifice, that is equal to 2 upon 5 minus old share, minus new share is 8 upon 25, that is equal to 10 minus 8 upon 25, that is equal to 2 by 25. Therefore, the sacrificing ratio of X is to Y is equal to 3:2. Now, goodwill of the firm is equal to 10,000. Z paid his share of goodwill in cash to the extent of 60% only as per the question. Hence, 10,000 is the goodwill of the firm and Z's share is 5 upon 25. That is rupees 2,000. Out of Z's share, he paid only 60%, 60 upon 100. That is rupees 1200. And cash withdrawn by X and Y out of a premium, that is rupees 1200 multiplied by 30 upon 100, that is equal to 360. 360. This is 360. Out of this 1200, 30% was withdrawn, 70% was left out. This 360 was withdrawn in the ratio of 3:2. That means Z not paid for his share of goodwill in cash is rupees 10,000 into Z's share 5 upon 25 and he paid 60%. That's why he could not pay 40%, that is rupees 800. Now, fair notes, journal format, first entry. Cash account debited rupees 41,200 to Z's capital account for capital rupees 40,000. To premium per goodwill 60% he paid rupees 1200 out of 2,000. Being capital and premium per goodwill received in cash from the new partner Z. The next entry will be premium per goodwill account debit rupees 1200. It was credited 1200, it was debited 1200. Z's capital account debited rupees 800. To X capital account, to Y's capital account, this 2000 will be distributed in the ratio of 3:2. Being premium money received and not received from the new partner transferred to old partner's capital accounts in sacrificing ratio. The next one will be excess capital account debited rupees 216, that is out of this rupees 1200 what we have got, 30% of that 360 was withdrawn by the old partners in the sacrificing ratio. Hence, X withdrew rupees 216, Y's capital account debited 144 to cash account 360. These 360 was distributed among X and Y as 216 and 144 in the ratio of 3:2. Otherwise, you can say this is 1200 multiplied by 30%, that is 360, and that was distributed in sacrificing ratio, being premium money withdrawn by old partner in sacrificing ratio. X capital account debited rupees 3000, Y's capital account debited rupees 2000 to goodwill account 5000. Being goodwill account already appearing in the books withdrawn, books written off to old partners capital accounts in the old ratio. This 5000 was written up to old partners capital account in old ratio. Next one is profit and loss appropriation account debited rupees 20,000 because the earning of the first year after Z's admission is rupees 20,000. Hence now all three are old partners or continuing partners. Profit and loss account will be debited to nullify and distribute and transfer or credit to the partner's capital account, like to X capital account, to Y's capital account, to Z's capital account in new ratio, that is as we have already calculated, and that will be transferred in the ratio of 12:8:5, and the amount will be rupees 9600, rupees 6400 and rupees 4000. Being profit made by the new partner in the first year transferred to all partners capital account in the new ratio, and journals both the column debit and credit are to be totaled. It will be rupees 68,560 in the debit column, and in the credit column rupees 68,560, and this is the final answer.